Welcome to the Rigatoni Capital Substack podcast. It is October 30th. I'm here with Kevin, also known as Bagholder on Substack. How you doing?
Outstanding, sir. Yourself?
I'm doing well. We have a busy week, busy day. Looks like Amazon just reported pretty good numbers, and we have lots of macro stuff between the Fed and the U.S.-China trade meeting. So we have lots to cover, and I kind of just wanted to make this more of like a weekly thing if it works out. And I know you're going away on a nice trip here in a little bit. So as soon as you come back, we can start it up again. But wanted to get you on before that. Also, thank you for meeting me in Arizona and taking me out for coffee. I really, it was a pleasure.
Hey, glad to do it.
It was
Glad to
really
do it.
nice.
Anytime you're out my way.
And I forgot, I told Anastasia we should have had a picture together and I could have put it on Substack and like, look, people from Substack are networking in person. So, um, but yeah, no, I just wanted to share the screen and kind of look at like where we are on the S&P, of course. It looks like gold had a nice rally in the last 12 hours. Um, I don't care about treasury yields or bonds, so I'm going to skip that. The Nasdaq obviously is coming off of a high here, and I'm guessing that had to do with probably just people taking some profits. I think between the Fed being a little underwhelming, Powell's speech was a little underwhelming. Might not get a cut here in December. Who cares? In my opinion, I
I
don't
suspect
care.
with all those earnings coming out today, if they're all as strong as the whisper numbers, I suspect the Nasdaq will catch a bid the next few days, but we'll see.
Yeah, absolutely. And if they don't, they'll come back eventually once people are taking profits. Because I also believe that Apple came out, and Apple's up, as you can
Wow.
see on the screen. That's a
Yeah.
big deal. Yeah. Let's check Amazon. Amazon was up. I think AWS, kind of surprised, not surprised, but it looks like we're back on track with nice growth on AWS. I kind of read that maybe some of their operating margins on the retail side are flat or not doing as well, but who cares? AWS is what drives this stock. And MicroStrategy should have reported today. Do you know?
Yeah, they have their earnings calls coming up in about 15 minutes.
Okay,
I
nice.
would I would imagine the numbers are out first, but I haven't seen them.
Yeah, and I would imagine that they are net profitable again this quarter, so they can eventually get in the S&P, you
Yeah,
know?
I suspect they'll post around a $2 billion gain on their Bitcoin position.
Nice.
But
Their
we'll see.
yield, their
Yep.
Bitcoin yield.
Yep.
And what I'll do is I'll just give my thoughts on the US-China quote truce. It wasn't a trade deal, I guess we're calling it a truce, which is pretty disappointing.
Well, if it,
My only comment, what's that?
I say if it ends the tariffs for a while, I mean, that might be a good thing. I mean, the real question is if we're going to do anything long term to try and, take away some of China's leverage. I mean, we got to start figuring out how to mine rare earths. We got to start figuring out how to manufacture things here. We got to start figuring out how to increase energy output here. And if we can start accomplishing some of those things, probably wouldn't have to fly over to China to try and cut deals all the time.
Yeah, and we'll talk about an article which I think you read. Um, it was this one here by
Yes.
Alexander Campbell, called "Time to Build." I think he goes over like the problems on pretty much the speed of how we're deregulating everything in this country and how the way our politics is set up, we don't have a autocracy or a dictatorship where we can red tape by cutting whatever we need to cut to start making things here. It's just going to take too long.
Yeah, it's a
But we
lot
can get
easier
in
over there.
a lot easier over there. And my only mention is look, I think leading up to this meeting between Xi and Trump, it was kind of like sentiment that once they put the constraints on the rare earth refining exports, that was like the dagger, I think, for Trump and for Bessent and for the U.S. and our country. I think that was maybe China's last thing they had in their pocket. Um, and we see both kind of like stuck here, in my opinion. And, of course, yeah, less tariffs is fine. But, I really wanted to sell some Blackwell chips
Yeah,
as
yeah.
a NVIDIA shareholder. And I wanted to see that in exchange to the rare earth, being able to get refined rare earths from them, and make see them get along. And I mean, we didn't see that. Those are the two main things I wanted. I don't like the tariffs. I think the tariffs are, not a resolution. At first, I kind of was like, yeah, this is a negotiating tactic. I like it, Trump. And now I'm kind of, I've changed my mind over that in the
Now,
last 6 months.
in theory, it should be a lever to bring manufacturing back here to the States.
Hmm.
I mean, that's the whole idea. If you're charging, 100% tariff or whatever the number is on China, that
Yeah.
effectively doubles the cost of things. All of a sudden, it starts to become profitable to maybe start manufacturing some of that stuff here.
Hmm.
So I
Hmm.
kind of get it. Like I said, it is a lever if used right. Now, whether or not that's happening with this administration, I'm not quite sure yet. But time will tell. Does it get manufacturing back here? I don't know. We're going to find out.
Hmm. Yeah. I would say no. I mean, right
I,
now it's a no, in my opinion.
I
It's
suspect over time we'll get some. Is it going to? Are we going back to the 1960s? And no, but I would suspect that we do get some back here.
uh,
What we
my other
need,
concern is the political cycle we have here.
yeah, there's that too. There's that too. And it's like that article that we both read a little while ago. It's a lot of the red tape. It's a lot of the bureaucracy. It's a lot of getting sued after making the decision to do something. I mean, trying to get anything done in this country is very, very difficult because of all the red tape and the bureaucracy. And if anybody could cut through that, maybe it's this administration. Now, whether or not he's moving that direction, I don't know. I'm hopeful, but I haven't really seen it yet. And based on what they accomplished or didn't accomplish with this meeting, leads me to believe that we're not much closer to bringing manufacturing back here to the U.S.
Yeah. Yeah, our country's full of lawyers and China's full of engineers.
Yeah,
Um, and then I have let's see what we got here. All right, so yeah, after we're done, my whole point of this chart was to see who was obvious, see if it sparked any conversations. But you know, the whole thing that's coming to my mind right now is don't trade around earnings. It's kind of just like my whole point of starting my Substack was like be a long-term investor. So
yeah,
because this can really hurt you if you're trading
yeah.
in
This
my
is all
around
short-term
earnings.
noise. It's all short-term noise. You got to, when you're doing this, it's easier to figure out which way the tide's going than each individual wave. And that's kind
Yep.
of how I look at it. Most positions I have, I've got for years, and sometimes I add to them, sometimes I lighten them up.
Hmm.
But I'm not a, get in, get out guy. I just don't. I'm not built that way either. I'm trying to find something that's going to be up a couple, 3, 4, 5 years from now, and build a position in it. And I don't know. That's just my way of doing it. It works for me.
Yep. I think that's the way to go. And if you want to jump in and try to share your screen, we can do
Sure. Let me
that. And
give
I,
that a let me give that a whirl if you don't mind. Let's see here. So this first one is a chart of gold, which has been a hot topic for the last I don't know, probably year. It's been on a tear, as you can see.
Mhm.
Um, it's finally had a pull back down to about 4,000. And I've had quite a few people contact me and saying, I missed the boat on this, or, it's too late to get in. It doesn't have the opportunity that it, had before. And, maybe I'll wait for a further pullback. And my thought on that is you may not get a further pullback in gold, but it doesn't mean that there's not opportunity present. And one of those things, and this is what I kind of like to share, is to consider Newmont, which is the biggest North American gold miner there is. They're basically a bellwether. They're as big as it gets. They mine 6, 7 million ounces a year. And what I wanted to try and explain is how leverage works in the gold stocks. So while you may have missed the move in gold, you haven't missed the move in the gold stocks. And I wanted to show you why that is that it's coming. So if we look at Newmont here, it's at about 81 today. A year ago today it was 48. 2 years ago it was 40. So it's basically doubled in 2 years. Same thing with gold. 2 years ago today it was about 2,000. Now it's 4,000. It has doubled in 2 years. And you might look at that on the surface and say, well, that seems about right. But it's really not.
Hmm.
Because the costs over at Newmont to pull an ounce of to pull an ounce of gold out of the ground have remained remarkably stable between 1550 and 1650. So we just call it 1600. You can see this column here is 1600 in costs. If you subtract that from what they can get for an ounce of gold, you see what their profit becomes.
Hmm.
In the last 2 years, Newmont, the stock, has doubled, but Newmont's profits are up almost 6x.
Hmm.
Follow? It
Hmm.
offers leverage as long as costs can remain somewhat stable, and they've actually gone down. They're closer to 1550 right now. But as long as they remain somewhat stable and the price of gold is higher or continues to go up, it offers a form of leverage. I mean, like I said, their profits are up 6x in the last 2 years compared to just the stock. Now,
Is this a leverage or like an arbitrage play?
well, it's part of the reason that you can buy an ounce of gold and spend 4,000, or you could put 4,000 in Newmont, who is a gold miner, and the
Hmm.
miner should always do better. And the reason it does better is because the profits will go up at a faster rate than the metal itself. That's what this little table is showing.
Hmm.
Gold's at 4,000 minus the 1,600 it costs to pull it out of the ground. They're making 2,400 an ounce for every ounce they pull out, right?
Hmm.
2 years ago, gold was 2,000 minus the 1,600. They were only making 400.
Hmm.
You can see how their profits have 6x'd, even though gold itself has only doubled. So if gold continues or even stays at a higher level like this, these companies are printing money, Newmont in particular. I mean, you look at their last quarter estimates, analysts were expecting 60, 70, 80 cents. I think they came in at a buck 56 or something like that.
Wow.
They're absolutely printing at this level. And gold continues to go, which I think it will. These numbers are only going to get crazier. And you haven't seen it reflected in the price. Normally, you see a stock that's making 6 times the money it was making 2 years ago, like, I don't know, Nvidia.
Hmm.
You see what happens to the stock price, right? They
Hmm.
go up considerably. This one has only doubled and kept pace with what gold has done. Like I said, on the surface, that might seem normal. Gold has doubled, Newmont has doubled. But when you think about the amount of money they're making and the profits they're putting out and the money they're printing because of this, because of the leverage that a gold stock offers over gold itself, it's definitely worth investigating. It's worth looking into. And if you're somebody that feels, well, maybe I missed the gold boat or it's too late, this is something you really got to consider. You have to look at the fact that you get leverage when you get into the gold stocks. And if the run continues, Newmont's got a lot of catching up to do.
Question, who is maybe like their largest segment customer? Is it the US, you think? Because they're located out of Denver, it looks like, their corporate headquarters.
Uh, yeah, they produce the gold and in raw form, basically, like maybe they're what are called dory bars or dory concentrate,
Hmm.
and it'll end up maybe some of their gold ends up at the COMEX, or some of it'll end up at the U.S. Mint, where they'll turn it into gold eagles.
Got you.
Believe me, they don't have any problem selling the gold. There's such a strong demand for it right now.
Mhm.
Every piece they can pull out, they'll be able to sell. So that part of it, are they going to be able to continue to sell? Do they have customers? Believe me, their product has more customers than they can get product.
Hmm.
And that's not going to change anytime soon. Do they have other competitors? They do. But Newmont is, like I said, they're probably the biggest North American miner. They might even be like the biggest on the planet, maybe the second big, whatever. They're in that range. They're at or near the deep end of the pool, I guess is what I'm getting at. And you don't often see opportunities like this when a company that size is 5 and 6xing its returns over a couple years, and yet the stock has only doubled. There's a lot of room for it to run. One other thing you might look at too is go back and look at the last couple of bull runs in gold, particularly the early 2000s, and look at what Newmont returned compared. I don't have it handy, but look at what Newmont returned compared to what gold returned. And as a general rule, it's somewhere between 2 and 4x. Now, if that's the case, you could see Newmont at 160 tomorrow and it would still be at the low end of a normal historical bull run.
Hmm.
So I guess the real point I'm getting at is for folks that feel they may have missed it, this is might be a place to look. And Newmont's not the only gold stock. There's others out there. But this one it's kind of easy to demonstrate what I'm getting at here because they've cut production very solid, 6.5 to 7 million ounces a year. They've kept costs very still. In fact, they've actually gone down a little. And if oil continues to go down, because oil is one of their biggest costs,
Input costs. Hmm.
production, their profit numbers might even get better.
Yeah, and I'm
So.
surprised to know that Barrick Mining is like half the market cap size of Newmont. I didn't know that, so I'm learning.
Yeah, Newmont's made some acquisitions in the last few years. They bought out some of the other big boys, and Barrick was saddled with a lot of debt, and they're just now getting to the point where they're out from underneath a lot of their financial problems. And now that gold is soaring and they're making money, they can go out and maybe buy up some juniors and get some more resources and start growing. Newmont to me is a little bit better play. It just is.
Sure, I like it.
Yeah. So anyway,
Great
that's
analysis. And look, they paid dividend. They are a cash producing business. And so Buffett, would could buy them. Um,
well, if it wasn't for the fact that they pull shiny rocks out of the ground, Buffett might be interested, but I don't. He's
yeah,
not much of a gold guy, that's for sure.
yeah, for sure.
So anyway, that's kind of my take on gold and my take on people that are looking to still find some way to play this gold bull market. I think that's a good one, and it's certainly worth investigating.
Great stuff. I appreciate that. That's
Uh,
really good.
Here's another one of our favorite charts. I'm sure you recognize this. This is
Yep.
uh, this is the last 2 years of Bitcoin,
Hmm.
and as you can see over here in the right corner, it is sitting in a very precarious position. It's a level which should act as support, that 107 to 109 level.
Hmm.
It was resistance on the way up over here about a year ago, back in here again, and even here in the summer. So theoretically, it should act as support here. But if that level breaks, and it very well could, next stop is probably 92,000. And
Okay.
there's probably a lot of people in the Bitcoin community don't want to hear that.
Hmm.
Um, I don't think if it gets down there, I don't think it'll be down there for long. I do think it'll get bought up, but if you believe in charts and what they foreshadow, it's a very real possibility it could end up down there.
Hmm.
And I say that not only because of what the chart looks like, but think about how markets move in general. They move in a way that's going to cause the most amount of pain for the most amount of people. And there's a lot of Bitcoin people in the Bitcoin community that have been hanging on, thinking, well, the 4 year cycle says we're going to have a big run. And so they're holding on to their positions and holding on to their positions. And if this thing crashes down into the 90s, a lot of them are going to throw in the towel. They just are. And it would wipe out, it, it would, let me rephrase that. Bull markets like to travel light.
Hmm.
Okay. They don't keep a lot of people around. So a trip down into the, 92,000 range or maybe even lower would shake out a lot of people. It just would.
Sure.
And it would make the bull light for the run that I think is coming afterwards. Am I bullish on this stuff long term? Absolutely. It's going way higher.
Hmm.
But short term, it's sitting in a very bad spot. And one more thing that I would probably point out is notice the volume down here and notice all the big days are red.
Hmm.
And then the one little rally we get right here, much smaller volume. And now here we are falling again and volume's accelerating. So it's just something else to look at that has to be resolved because it shows right now that there's more sellers than there are buyers. And if there's more sellers, well, guess what that means for the price?
Yep.
On a short-term basis, I think it's highly likely that this goes lower. And to me, the next level of support, you have to look all the way back to last year. That's be this line right here, which is about 92,000. And you look at all the times that that's served as support in the past. Um, there's a lot of people that if it gets down there, I think the bulls will make their last stand. If they can't support 92 grand, then it's going even lower than that. Now, I don't think
Hmm.
that's a possibility. I think it'll get caught before the 92. Um, but you got to be prepared for worst case. And if you're a Bitcoin holder, I think that is about the worst case there is. So
Hmm.
who knows? Again, one man's opinion. Short term, I think we could be in trouble. But long term, there's no doubt it's headed higher. What say you?
Um, I think that I am more bullish on Bitcoin in the last month because of gold. Seeing gold go up for the reasons that Bitcoin should go up is why I am more bullish on Bitcoin right now. So I think this is a buying opportunity here at 107. I think it's more of a buying opportunity at 99, 92. Um, but I think that it's ideal to uh, dollar cost average either way in Bitcoin.
Yeah.
You know.
One of the brighter spots is that the Bitcoin miners have held up reasonably well. Clean Spark and Mara, I think they're both in the
Hmm.
18s or 17s, right in there, compared to where they were over the summer when gold was at or when Bitcoin was at these levels before. I think they've held up reasonably well. That's an argument for higher prices from here.
Hmm.
MicroStrategy, on the other hand, is getting killed.
Hmm.
The NAV on that. As a matter of fact, that's let me pull
1.2
that up
maybe.
real quick. If you look at the strategy homepage and we go here to Mister, yeah, you can see the NAV is under 1.3 now.
Hmm.
So
Yeah, I was going to
basically,
say
what that means
1.2.
is every $1.29 you spend on a share of MicroStrategy, you're getting a dollar's worth of Bitcoin.
Hmm.
That might not sound like a great deal, but they do offer leverage, much like the gold miners offer
Hmm.
leverage on just gold. The strategy does the same thing basically with Bitcoin through growing the BTC or through growing the Bitcoin per share.
Hmm.
They've been consistently doing that for years now. I think their growth this year is around 25 or 26%. That would essentially wipe out the 1.29. I mean, that would get you back to even in less than a year, and then everything you get after that would be gravy, so to speak.
Sure.
But we're seeing MicroStrategy get hit hard.
Mm-hmm.
Um, I am a buyer down in these levels. I think it's getting incredibly cheap, and it's
Mm-hmm.
time to, if you really want to get crazy, to start thinking about some long-term leaps, maybe looking a year and a half to 2 years ahead on MicroStrategy.
Mm-hmm.
It's an expensive stock to buy, and you could take a decent sized position with a couple years time for it to react. And when Bitcoin does get going, this stock will get going as well. So,
Yeah, I first bought it was MicroStrategy. I bought at maybe like $99 a share, split adjusted. So it was back
yeah,
in August of 2024. The market was selling off pretty big back then. I can't remember even the reason. Um,
yeah,
and Biden was still
doesn't
in office.
it
I
doesn't
don't
need one.
even.
When Bitcoin goes up, it outperforms Bitcoin on the upside, and when Bitcoin goes down, in sentiment is terrible, like it is now.
Hmm.
By the way, I think that's another argument for short-term higher prices. Sentiment in Bitcoin is very low right now.
Hmm.
There's a lot of people that are frustrated. They've expected rallies by the end of the year. Everywhere you're hearing, well, 150K by Christmas, 200K by Christmas. You hear numbers like that everywhere. I don't hear anybody saying 70K, 75K. Everybody's leaning one way. Um, and the fact that we haven't got a rally has left a lot of people frustrated. Now, have those people sold out of their positions? Maybe some of them are selling out of MicroStrategy right now, and that's why you're seeing it down, what, 7, 8% today,
Yep.
you know?
Yep.
So,
I do. Yeah, I mean, I don't think anybody wants to touch Bitcoin right now, let alone strategy. I think I think we're at the contrarian time now. Bitcoin at 107. I think that is contrarian, and that's why I like Bitcoin here. But I could be wrong, and it doesn't matter. I'm long term, and I believe in the asset class. So, but
yeah,
I
right.
love
I'm long
Bitcoin here.
term. Yeah, long term, I'm with you. It
Hmm.
just scares me a little bit in the short term because it's at a very it's at a level that if you believe in charts and technicals, it doesn't want to stay here. Okay, it wants to move away from here, and whichever direction it goes, it should
Hmm.
make a substantial move. If you look at all the time it's spent in the last year in the 107 to 109 range, it's a lot. And either
Yeah,
either the Bulls are going to win here or the Bears, and whichever one wins is going to rout the other for a little while.
sure.
I don't know which direction that is because there's things pointing both ways. Uh, um, so I look at it and think, long term it's up. I don't have to worry, but there
Yep,
could be some short term pain.
sure.
And MicroStrategy, for those that aren't really interested in dealing with the risk or the leverage that offers, because leverage cuts both ways.
Hmm.
You're going to lose more in down markets than you would holding just the Bitcoin. But they do have other options available. And one of the ones I wanted to talk about today was their STRC stretch, it's called. Basically, he's running it like a money market where the price is designed to stay between 98 and 100. Okay, so the price doesn't move very much. 10 cents in a day, 20 cents in a day. If you look at it since it's been out, I don't think it's been lower than 96 or higher than 100. It stays relatively flat. And he's paying a monthly dividend on it. And if you look right here, you can see that the effective yield on it right now is 10.62% per year.
So it's a 0.885% per month, almost a 1% yield
Uh,
per month.
yes. And there's an excellent chance because he wants this between 99 and 100, and it's at 98. There's an excellent chance today when they have their earnings call
Hmm.
that you may see them raise the dividend again. They have on the last day of every month, the way this is set up, they can alter the dividend in one way or another. Like last month, they jacked it like 1/4% from 10 to 10 and a quarter. The month before that, they went from 9.5 to 10. And they're pushing the yield up. And the idea behind pushing the yield up is to get more investors. And when you get more investors, it should push the price up into the 99 range, which is where they want it.
Hmm.
Now, if they get too many investors and it goes over 100, his idea at that point is to start issuing new shares to get it back below 100. This is how he's going to try and keep it pegged between 99 and 100.
Hmm.
Piece that he's using to do that with is the yield.
Hmm.
Now, what's interesting is it's almost impossible to find a 10.5% yield on anything anywhere, right?
Yep.
But he's offering it here. And there's even one more benefit to it, and that's this. Normally, when a company makes money and they pay a dividend, okay, the dividends that they pay you are taxable because those are profits that the company made,
Hmm.
okay? That's normally how dividends work. They're profits that the company made that they passed along to you, and you therefore have to pay taxes on those profits. Stretch doesn't make any profit. The way that he plans to pay the yield is by issuing more shares.
Hmm.
Okay. He's going to issue enough shares to pay the 10% yield. But what that is, if you want to get technical about it, you can talk to your accountant about it, but it's what they call return of capital.
Hmm.
Okay. And return of capital does not get taxed.
Hmm.
So what I'm saying in essence is you get 10.62% per year with no tax.
You
Okay.
as the investor in the
As,
in this
as the
preferred.
investor, somebody that's invested in Stretch, 10.62% a year. Now, having said that, it does affect the basis. So let's say you paid $100 for the stock and you collect $10 in dividends, your basis would get lowered from 100 down to 90. And then
Sure.
you collect another $10 next year, your basis would get lowered to 80. Eventually, when you go and sell the stock, if you ever do, you will have a capital gain.
Hmm.
Okay. So, worst case, you could collect $10 a year for 10 years. 10 years from now, you go and you sell your shares, you would owe a capital gain on the $100.
Hmm.
Your basis would get to zero. After your basis gets to zero, all the dividends you collect would be taxed as regular income. But that's 10 years down the road. In the meantime, you pay nothing for 10 years.
Hmm.
So not only do you get 10.62% yield, you're not paying any tax on it for at least a decade. And I defy anybody to find me a better deal than that out there, especially
Yeah.
anybody that's knows anything at all about bonds.
Yeah. I
You
mean,
know,
large institutions, and large institutional buyers, um, billionaires,
right,
very, very wealthy individuals were the customer for this item. And now I think it's available for people like you and I.
right. Actually, it has been very closed to institutions
Okay.
because most people that run bond funds, pension funds, places like that, they're only allowed to purchase things that have like, S&P ratings on them.
Hmm.
Okay. Standard and Poor's has looked at it and said, this is a triple A or a double B or whatever. And you have to have a rating before institutions will put money into them, right?
Yep.
Well, nothing about MicroStrategy has had a rating until just a couple of days ago. They were issued a rating. They gave them a B minus, which is absurdly low, but it does open the door for institutions that understand the assets, that
Sure.
understand the assets. So pension funds that 3 days ago couldn't buy it will now be able to get in it because it does have an S&P rating. It's the first of any of the Bitcoin treasury companies to have an S&P rating.
Hmm.
That's something that a lot of people might not have seen in the news in the last few days. That's to me, it's huge. And again, it's going to introduce more buyers, and more people are going to climb into this particular preferred stock. And all looking to get the 10.6% yield and not have to pay any taxes.
Sure. I
So
think, yeah, Jeff Park had noted that this makes it more difficult for someone like the Mag 7 to put Bitcoin on their balance sheet because they don't want this kind of credit rating. And so there's a negative, he thinks there's a negative to it, in the overall Bitcoin uh, economy,
there
for treasury
is,
companies.
but I would love to have them explain to me. So take a company like Oracle, right? Booming right now, all kinds of money coming in, making money hand over fist, right? They made $12 billion last year, 13 billion, right? They're
Hmm.
160 billion in debt.
Hmm.
160 billion in debt. Yet you go price some of their everything is double A, triple A.
Yeah,
I mean, in what world does that make sense? They
it
they
doesn't, and
they,
it's
they make
unfair.
they
It's
make 12
unfair.
billion a year. They owe 160, and that's good debt. You can go buy that, right? But here you have MicroStrategy, who's got 80 billion in Bitcoin and 8 billion in debt, but his debt's bad.
Right.
So while on the surface it might seem bad, I'm really not bothered by it because it does open the doors to a lot of people that weren't able to buy it 3 days ago. And
Yeah,
I
absolutely.
think you're going to see some money flood into that. It's been up all 3 days since. Now, again, it doesn't move very much because he wants to keep it pegged. But the minute it starts getting between that 99 and 100, he's going to start selling more and you're going to see him buy more Bitcoin. And this is where it's going to come from.
Yeah.
And it
So you're
wouldn't
telling
shock
me
me a
that
year or two from now. Right now, there's 2.8 billion, as you can see here, outstanding in stretch. It wouldn't shock me if it was double that a year from now.
now you have all these other preferreds there.
We do?
Like, and so they were all technically graded a B minus as well because strategy overall was graded a B minus, or
Yes. Now, they didn't grade the individual preferreds, they grade the company. And
yeah, that's
the,
what I thought. S&P
so because
Global,
it's that,
usually
yeah, so they
Moody's.
all essentially have the same rating. They're looking at the company as a whole. But again, not happy with the rating, but happy that the door got opened so that more institutional money can get in. So you got to look at the positives, and like Jeff Park says, yeah, it's going to stop the Mag 7 people from putting Bitcoin on their balance sheets, and maybe that's what the powers that be want. They don't want other companies doing this.
If
They want
anything, it
the
makes strategy more unique.
well, it allows for some centralization or it allows the Bitcoin to be accumulated. It allows a honeypot to get built. I hate to say that, but you're going to have a bunch of Bitcoin in one place. If they started allowing it on all kinds of different companies in the S&P, it would stay more decentralized and it would be a little bit harder to control. If MicroStrategy gets to the point where, they have 5% of the float or 7% of the float or something like that, and the government walks in their front door and says, we want you to do X, Y, and Z, they're not going to have much choice. They're going to have to do it. Whereas
Hmm.
if all that Bitcoin was spread out over 100 different institutions, it would be a lot more difficult for the government to try and control.
Sure.
So that might be why the negative rating. I don't know. It
Yeah.
certainly doesn't make sense from a fundamental standpoint when you look at the debits and the assets.
Hmm.
Way
Hmm.
more assets than they need. They're not gonna default on 8 billion in debt when they have 80 billion in assets on their balance sheet. It's just not gonna happen.
Sure.
Whereas Oracle,
Hmm.
as good as things might seem now, Oracle still needs execution, and they need execution for the next 10 years going forward.
Yeah.
And they could do it. They're likely to do it, but there's also a possibility they don't.
Sure.
So I would think that's more riskier than anything along the stretch or the strife or the strike or the stride, any of his other preferreds. They all have their own benefits as well.
Great points. Great points, Kevin.
So,
You're a star. Wouldn't have been able to do this without you. Well said.
well, believe me, this takes a lot of my time to try and learn this stuff. And
But you
if it
enjoy it.
I'm happy to share it because I want other people to see it.
Hmm.
And if I get stuff wrong, I would love to have somebody say, "Hey, you're missing this piece, or you don't understand that." And I'm hoping to get some of that. I'm hoping to get some of that type of feedback because
Hmm.
it'll only help me get things more right in the future.
Sure. Yeah. I mean, hey, they can come on the show and we can have
Yeah,
a three-way conversation.
right. So that's the strategy or MicroStrategy side of things. The last topic I wanted to talk about a little bit was Tesla, who came out with earnings last week. And
Hmm.
the particular branch of Tesla that I wanted to discuss was their energy sector.
Our favorite
It's my
segment.
favorite without a doubt because I nobody sees this coming. And you look at this chart, I'm not sure. Oh, here it is. Yeah, this was put out by CernBasher, an excellent follow on Twitter, by the way, if you get the chance.
Okay.
But you can see he's basically broken it down by quarters. The green is how much revenue they claimed last quarter. The
Hmm.
yellow is basically outstanding orders they have or backlog,
Back order. Hmm.
back order, right? You can see that they're both growing like crazy. I mean, here's quarter three of 2025, 12 billion in revenue, 15 billion on the back burner. You look down in quarter three of 2022, just 3 years ago, 3 billion
Yeah.
in orders. So they basically 4x'd, almost 4x'd in 3 years, right?
Hmm.
And a lot of people, what I've heard is they said, well, the last 4 quarters have been flat. Well, the problem is they've run into a capacity issue because they haven't had enough. Uh, the factory is producing the one that they had was producing at maximum capacity. They
Hmm.
just got a second one open in the second quarter of 2025,
Hmm.
which is going to allow them to almost double production. And they have another one that's going to open in Texas in the first quarter of 2026.
Hmm.
So those two factories are basically going to allow them to 4x their current production.
Hmm.
So in theory, by the end of next year, you could have instead of having the 12 billion in revenue, if they were running at capacity the whole time, it could easily be 50 billion. It could easily be as much as their cars bring in. And that's you're only talking a year, maybe two away for that.
And they have nice profit margins on these, I believe.
The margins on these are obscene. They're north of 30%.
Okay.
In fact, I think in the last earnings report, I think they were 31.9. You can quote me on that. I'm certain that that's right. 31.9% margins on these. That means every $3 they're bringing in, they're keeping one.
I
And
think you're right. I was assuming it was around 30.
yeah.
Yeah.
But you look at this, let's say they 4x production in a couple years. And the funny thing is, the margins have only gotten better over time.
Hmm.
Why? Because there's such incredible demand. There's going to be incredible demand going forward as well, because as AI needs data centers need these mega packs, and they need
Hmm.
battery storage, and they need to be able to balance power. And Tesla, they have the whole market. There's nobody else even competing in this space. That's why they have 30% margins in an order book that they can't even fill.
Yeah.
They make what they make on their cars. That's fine. But I strongly suspect 2, 3, 4 years from now, this is going to be a bigger part of the company than the cars.
Wow.
And you can see how it's growing. Anybody that can look at this chart can see how it's growing. So
Do they hint at that like during the earnings
I'm sorry,
call?
say again?
Do they hint at this during the earnings call? Like,
Yeah, they talked about
if
how well they just opened one of their factories in Q2, which is going to alleviate the backlog. They did mention that. And they're opening another one in Brookshire or Brookline or Brookfield, something along those lines in Texas. And that one's he expected to be open first quarter of 26. So
Mhm.
next 6 months, let's say. So they did talk about that and how those two factories, they'll then have three of them building these things instead of one. And they're big. They're bigger than the original ones. And so basically they're going to be able to 4x their current production. within a year or two.
Sure.
And if you look at those numbers, they're staggering. And when people say, well, the energy quit growing, it quit growing because they're at capacity.
Hmm.
At capacity, like I said, with one of their factories just opening last quarter and another one opening next quarter, sky's the limit for the next couple of years.
Would you be concerned about getting the raw materials from other countries or?
If there's one thing that Elon excels at, it's being able to control his own supply chain.
Yeah, this is like lithium, I'm guessing, right?
A lot of this is lithium, yes. I don't doubt that for a minute. Now, does that mean that he has to go through China to get it? Maybe. I don't
Hmm.
know. But he's probably on better terms with China than our government is. He's got factories and businesses over there.
Hmm.
And he's basically, when you open a business over in China, you're partners with the government there. So he's, like I said, probably got an easier way to get what he needs from them than
Hmm.
we do as a country. And the one thing that I've seen from him in business over the past, decade or so that I've followed him, he is remarkably adept at building and holding on and controlling a supply chain.
Hmm.
So I really don't worry about that from him. And
Okay.
while lithium is one of the things they need, there probably are a couple other things they need, but I don't doubt for a minute that he's working on seizing whatever those things are.
Hmm. Hmm. Good stuff.
So
Good
anyway,
stuff.
that's those are the few things that I really wanted to pitch to you today.
Well, you did a great
So you,
job. You
you
got
had
me.
an idea. In fact, wait a second, let me see here. Ah, yeah, one last thing about those
Mhm.
factories that I was telling you about. Um, Here you can down here at the bottom, the Mega Factory in Texas, Brookshire, Texas, 20 expected to open 2025, 2026. They said on the earnings call that it should open first quarter.
Hmm.
And the one that just opened second quarter, you can see here that one is in China. So hopefully if he needs lithium,
Hmm.
that's where he'll be able to get it. I asked Grok, and this is what Grok told me. So
Sure.
um, there you go. And it's those
Nice.
two factories will allow them to quadruple their Megapack production.
Yeah.
And uh, you know, as AI gets expanded and more money gets thrown at AI, we're going to need more data centers, and the data centers are going to need more energy. So I am big in the energy field right now. Anything to do with energy, I think is going to be growing like crazy the next few years. I like
Yeah.
Exxon Mobil. I like Peabody. I like there's a whole bunch of them out there. Pick them. But
Yeah.
these mega packs, the reason I like this is because they have the whole market.
Hmm. Hmm.
And as good as Exxon Mobil is, they don't have 31% margins on their products.
Yeah.
They just don't. And
Yeah.
I don't see how this slows down. You know,
Yeah.
with the demand for energy that's coming, I don't think this slows down for decades. I really don't. He's going to be building more factories soon enough because that
Yeah.
4X ain't going to be enough.
Yeah. I wish there was a way to invest in it separately. It's
Yeah.
tied into a company that's worth $1.46 trillion.
Yep.
It's hard for me to wrap around. I wish it was separate, and I would be buying it right now. I have to just be careful because I have to back this out of,
Yeah, you have to think about the cars and what do they make, and you look at the margins on those, and
mhm,
compared to many of his competitors, he's doing well, but the entire industry is experiencing a slowdown.
yeah,
As cars are being sold, they're becoming more and more unaffordable. I mean, unaffordable. You have all those things to consider. And, the other thing, it's another wild card, not that this isn't enough, but if he solves autonomy and all of a sudden we have robo taxis that are driving themselves, there's a lot of people that are going to quit owning cars,
sure.
and
Hmm.
maybe he ends up with a huge piece of that market too. Who knows?
Hmm. Yeah.
But there's no disputing the numbers on what this energy is doing, and I don't see what's going to stop it because it's certainly not going to be demand.
Sure.
So
Okay.
anyway, that's my 2 cents for the day.
That was good stuff.
Yeah, yeah.
How am I supposed to go after that?
Well, how are we doing on earnings? I know we've had some earnings calls since we started this conversation. We got to have something going.
Let's see. Um, we got Apple still up, and Amazon still up. Wow. Look at Amazon.
250. Am I reading
All-time
that right?
high.
253.
Yeah,
It's up 10%?
that's big for me.
Wasn't it? Wait a
Amazon.
second. Wasn't it? Didn't it close at like 225 today?
Yeah.
And it's
220,
253 in the aftermarket. Wow.
222. Yeah. Um, let's see if we can find anything.
Wow. Wow. That is how's Coinbase doing?
I don't know. Were they reporting?
Yeah, they report today too. I think when we have our chat next Thursday or maybe in 2 weeks, we'll have some discussion on
Yeah,
Coinbase.
I don't follow Coinbase a lot. I have a very, very, very small position in Hood. Let me see. I don't know. They must have, who knows?
Yeah, must
You don't
be.
know until you really get into the call,
Yeah.
and see what they said that got people excited. Because when we started this, it was not up this high. All right. Well,
It looks like
I'll go.
Coinbase looks like it's up $8 in the aftermarket, so it's up a couple percent.
Oh, nice.
So they must have had decent numbers. Looks like MicroStrategy's up about $8 in the aftermarket. So
Jet.
they must be liking what's coming out of there.
Which stock?
MicroStrategy or
Yep.
strategy.
Yep.
I can't bring myself to call it strategy. I don't know
Well, the
why.
ticker is still MSTR. It's hard. Jassy says we haven't seen this type of AWS growth since 2022. Since 2022.
Wow.
Um,
So there's that much cloud demand, huh?
yeah, I guess so. I can go. We probably have been on this for what, an hour?
Hmm.
Yeah. I'll go real quick. Chipotle, Chipotle or Chipotle,
Yeah.
however you want to pronounce it. Um, you were right. I was wrong. Wish I didn't buy this stock under 40, thinking it was a deal.
Yeah.
Um, I just really am kind of surprised that I thought the younger consumer is strapped for cash
Hmm.
because of inflation.
Agreed.
And therefore, my thesis was they would be eating more at Chipotle, not the opposite. But that is apparently what they're telling us. And remember, this is a company that's growing store count,
Yep.
nicely each quarter, and they're probably keeping prices the same. And there's no reason for you to miss revenue like they did. So that they definitely, definitely deserve to see a nice sell off. Let's see where they are. Um, Look, if they weren't like growing store count, then
You know,
I could
what's
handle it.
interesting, I think when you and I talked about this, maybe on one of our very first conversations, you look at how many locations they have and you divide that into the market cap,
Hmm.
and then you do the same thing for McDonald's or something like that. You could buy six McDonald's for what one Chipotle cost. Now, this is a year ago. I don't think that's the case anymore.
Sure,
Now it's you could probably buy three McDonald's for what one Chipotle costs. It's getting more in line with where it should be.
absolutely.
Um, but the thing is, these food places, it's a very, very it's a fickle thing.
Yeah,
What's popular today may not be popular tomorrow. Like when I drive by I don't know if you want to call it the fast food area in my town where I live, but um, they have everything there. And I look around, and you know what has long lines? Cane's Chicken and
yeah,
Dutch Bros.
sure.
Those two have lines out the door. Everything else might have one or two cars, including Starbucks, including Chipotle, whatever. So if you use the Peter Lynch eye test and you look at it, you have to say, well, maybe Dutch Bros is worth a look at these levels. In fact, I was just looking at their chart again the other day.
Mm-hmm.
It looks like it should have significant support in the low 50s,
Mm-hmm.
where it got caught before. And just what, 6, 8 months ago, beginning of the year. Um, and yeah, you can kind of see it turning up from that level. It's no
Yeah.
coincidence it got caught at 50. They're growing their stores, their same stores sales are
Mm-hmm.
growing. There's a lot to like about that company.
Sure.
But who knows? 3 years from now, they may be out of fashion because somebody else comes along. Who
Mm-hmm.
knows? That food
Yeah.
stuff, it's tough to pick winners.
Yeah, and so is fashion because when I was in Scottsdale, Old Town, by the way, thanks for that recommendation. It
Yeah,
was
yeah.
great. We ended up just going to Fashion District. I mean the
Okay.
mall.
Yeah.
So we were just in Nordstrom, and the first store you walk into the mall from Nordstrom is Aloe. Is that what they call it? The yoga pants store. The new Lululemon,
The new
I think it's called.
Lululemon, yeah, the new one.
I think it's called Aloe, right?
Because the old Lululemon, that's on sale too, by the way.
So
Yeah,
we
Aloe, that's
spent
it. Yep.
we spent an hour in Aloe. It was a club in there.
Yeah.
Loud music, people spending lots of money, long lines,
Yeah.
and we walked by. So we did our shopping, and then I didn't do any shopping. She did, and then we went to Lululemon, and it was like different crowd, dead.
Yes.
Like definitely was not the Lululemon of 10 years ago.
Not
Definitely a
not
big,
even the Lululemon of 2 years ago.
yeah,
Even
exactly.
2 years ago, it was still booming.
Right. Right.
But
Hey,
and you
this is
look at
Lululemon.
what's that?
This is this is Lulu. My
Yeah.
pants are Lulu. I only wear Lulu
Oh,
because
no
I
kidding.
know I fit. Yeah, because I know I fit in this, so I just buy it online. Like it's like almost like a subscription at this point.
Yeah.
But no, all the females want aloe. I know that.
Yeah.
I realize this. Yeah.
Right. But is that going to be a permanent thing?
No,
It's not. It's the hot
Lulu
thing
will be
now.
hot. Lulu will be hot again in 10 years.
Yeah, like Levi's, it's going to have to, 40 years between being hot, I don't know.
Abercrombie Fitch. Yeah.
The one knock I have on all of those that you just named is they're
Hmm.
all way spendy.
They're what?
If you don't want to spend $120 on a pair of gym shorts or something, if you're like me, I just go to the Walmart and pick out whatever's $10 and wear that. You know, but I'm certainly no fashion maven. But the prices, if the economy, starts to pull back or we end up in trouble and people are losing their jobs, the world where people are paying $120 for gym shorts and $200 for yoga pants, how big is that market? I gotta wonder.
Yeah, not big. Um, I have a recommendation. His name is Sylvain Sorel. He is writing on Bitcoin all the time on Substack. I think this is a free article.
Yeah, I've read most of his free articles.
Okay,
He
did you
does have a
read
way
this
with
one?
words. I did.
Yeah. Well, we don't have to get into it, but I wanted to recommend it to anybody that is not in the learning curve of Bitcoin yet. I have a lot of friends that
Yep.
haven't gone down the rabbit hole of Bitcoin yet.
It's for the people that feel that they're just stuck in a 9 to 5 grind and can't see the exit. And the way that he put this together, it's very well worded and it will help you see the exit. It'll help you see the way out. And that's a lot of people. There's a lot of people have jobs they don't like. And you want to figure out how to get away from it? There's a lot of answers in that article, and it's worth looking at for sure.
Yeah,
I have
and
nothing but praise for the man.
and the most important part is self custody too. And we talked about that at lunch.
Yep.
And
Yep.
you got to text me that cold wallet you have.
Yeah, well, in fact, why don't we just make it I'll put that on the list for the next time we get together and talk, and we can have a little, 5 or 10 minute discussion or whatever it takes about self-custody and how to do it. That, a lot of people might be interested in that, I think.
Absolutely. I am. So everybody else is. Um, all right. I don't think we have time to get into NVIDIA. I know you have your skepticism. You're just a little skeptical in the NVIDIA, and
There's no
I
arguing with the numbers they're putting up.
yeah, I just like this. From Devansh.
Hmm.
Uh, Devansh, he's probably got a ton of subscribers, and he covers the AI space really well. And I like this. I always thought this was a software story for NVIDIA. If they were ever going to be a $10 trillion company, they had to have some kind of lock in with their software like Apple has. You have to get the ecosystem, and
Right. That's what they're
I
trying to build, I think.
that's what they're trying to do when they are investing in these companies. I don't like the lending. I'll agree with you on that. I don't like the leasing of the chips. I think that gets into a gray area. I don't like that at all. But if you have the capital to invest in these smaller AI companies that are going to use your chips, technically, he says they don't have to use his chips, but we're going to assume everybody's using his chips at this point. I like this idea of having them set up on the CUDA system software to train, and how they have a moat. I just thought this was a really good article, and the name of the article is kind of debunking the AI bubble story. The AI is a bubble narrative is stupid, wrong, and dangerous. It came out on October 17th. It's a long read. The only reason I had time to read it was because I had time this weekend to read it.
I'm going to look into that. I've not read it, and I'm
Yeah.
always interested in that type of thing, so I'll certainly take a look at it.
Yeah, it's heavy. Like it's really, really in depth, very detailed, and long post form.
Yeah.
Just want to mention a few things from yesterday, which is now old news because of how annoying these earnings come out so fast, and everything comes out in the same week. Mercado Libre, I just want to show everybody that these revenue results. This says 39.5% year over year. Okay, I'm not going to say anything else. I'm going to just let you know. Um, we had a Microsoft earnings report, 18.4% year over year. We had Meta, 26.2% year over year revenues.
Wow.
We have ServiceNow, 22% year over year revenue. Um, what is this?
Yeah, Meta had a ripper too.
And yeah, so I mean, my whole point of showing people that is like if you just look at the top lines, and you have some kind of dispute that I think AI is a bubble. I think that these you're not going to see a return on capital. I mean, I'll take 39% or 20% year over year revenue each quarter if I can get it, and you know, go at it with your AI as a bubble stuff. I think it's
Yeah, those
working.
big companies, they're going to need that though. For instance, so Nvidia hit 5 trillion the other day, right?
Hmm.
So stop and think about that for a minute. 5 trillion, if you just took that money and put it into treasuries at 4%, that's 200 billion a year.
Hmm.
Is Nvidia making 200 billion a year? No. They're making 80. They might get to 200 in a year or two or three. In fact, they're likely to. But the point
Yeah,
is, when you lock up
you talking
5
revenue
trillion in
or
capital
Yeah.
and you're growing and you're making 80 billion, that's 1.6% a year return on capital.
Hmm.
So they need numbers like this. They need 40% year over year sales.
Yep.
They need to be doubling their or increasing margins. They need they need numbers like this is what I'm getting at. And as
Yeah.
long as this continues, the party probably continues.
Yeah. Sure.
But the
And all
minute this
those
stops, just like with Chipotle, they're going to yank a leg out from under that table. So
Yeah, there's a great visual of the year 2022 when the four hyperscalers um, had backwards revenue. So it was like the year 2022, there were like three quarters in a row that their revenue was actually going backwards year over year. Those stocks,
I remember that in Microsoft. Yeah,
yeah, all those.
I think it was
It
Microsoft.
was
Yeah,
Google, it was Microsoft, it was Meta, and it was definitely Netflix. And those stocks went down, and it was Nvidia maybe too, because it was before ChatGPT. And those stocks sold off just because of that small. I mean, we're talking like a 2%, 3%. Pretty much it was flat instead of growing
right,
20% year over year. And
right,
those stocks collapsed, what, 50 to 75% on
right.
average. Yeah.
Yeah,
So you're,
that's in why is what I'm telling you that these are 5 trillion and $3 trillion entities. You miss by a little bit, and the market's going to make you pay.
yeah.
But for now, it's party on, Wayne, because the numbers sure look good.
All right. I think that's all I got here. And yeah, so you will be out next week.
Probably.
Hmm.
I'll be back in 2 weeks for sure.
Okay.
And I don't know if I'm going to be anywhere where I can chat next Thursday. So
Yeah.
I'm doubtful at this time, but I'll certainly let you know.
Yeah, definitely. I appreciate it. Anything else? Where can people find you?
As always, I'm on Substack. You can just look for Bagholder and find some of my latest articles on everything that we talked about today. Those are all my favorite subjects. So
Mhm.
uh, that's it. Other than that, I'll see you in a couple of weeks.
All right. Sounds good. Thanks for coming on.
Good to hear from you, buddy. Take care.
Yep.